What if the biggest myth in European venture is the trade-off between impact and returns?
I did some maths before this podcast, and actually the proportion of impact companies, so those that are SDG aligned in some way, account for both 40% of invested capital and 40% of NAV.
Perfect parity. But here's the problem most LPs don't see coming.
I don't think that we've seen the VC impact market really develop at scale. Large impact funds that are able to do those later rounds as well.
So where's the real edge? It's not the label on the fund.
GP thesis fit, I think, is the most important thing when you're assessing venture funds. So why does this team have an ability to outperform on this strategy compared to their peers, right? You're looking to the alpha that they can deliver.
Because when Isomer Capital analyzed their biggest winners, they discovered something shocking.
Out of the 10 biggest value drivers that are SDG aligned by NAV, actually only one of them has been captured by one of the more impact aligned funds that we have in our portfolio.
The best companies aren't where you'd expect. So how do you cut through the noise?
A lot of pitch decks look very generic. You're really trying to cut through what is easily typed on a screen, but what is actually acted upon. And so real evidence is always the thing that takes funds from being good to being great.
Evidence over story, access over labels, but get the fundamentals right.
Make sure those goals are aligned. Otherwise, the relationship will break down. It may not be sort of a long and fruitful marriage.
Discover how Europe is capturing impact without compromising returns with Chloe Dagnall of Isomer Capital, only on the Impact series by EUVC Podcast.